Do you owe taxes on an inheritance? The answer is maybe. And that maybe matters a lot because if you recently inherited $500,000 or more, one wrong move could turn a manageable tax issue into an expensive mistake. Selling too fast, cashing out of an IRA, giving money to family, paying off debt before you understand the tax picture, those may feel like responsible decisions, but if you do them in the wrong order, they can create problems. And inheritance is rarely, almost never just about money. You may be grieving. You may feel pressure from family. You may feel guilty. You may feel excited. You may also feel completely unsure what to do next. And then the tax questions start. Do I owe tax on this? Should I report this? What if it was an IRA? What if I sell the house? What if my siblings want their share? That is a lot to carry. Hi, my name is Tommy Cloud. I'm president of Third Act Retirement Planning. It's a company that I started back in 2000. I am also a certified financial planner and certified kingdom advisor. I help people who receive $500,000 or more in sudden wealth make wise financial decisions before taxes, family, pressure, and rushed investing create costly mistakes. In this video, I'll walk through the big tax questions you need to understand before you spend, invest, sell, or give away an inheritance. This is educational, not personal financial tax or legal advice. All right, so let's talk about the inheritance itself may not be taxable income. Decision number one, do not assume the full inheritance is taxable income. In many cases, if you inherit cash, a bank account, or personal property, the inheritance itself may be treated as income on your tax return. That surprises people. They think, I inherited $700,000. Does that mean I owe income tax on $700,000? Often the answer is no, but that does not mean there are no taxes. It means you need to know what kind of asset you inherited. There is what's called income in respect of a decedent, and cash is different from an IRA. A house is different from a brokerage account. Life insurance is different from an annuity. A business is different from a checking account. The tax answer starts with the asset. And then the second thing I want to talk to you about, point number two, income after the inheritance can be taxable. I just mentioned that. Discussion two, separate the inheritance from the income it creates. Let's say you inherit $600,000 cash and place it in a bank account. The cash itself may not be taxable income, but the interest it earns may be taxable. Or say you inherit a rental property. The property may come to you through the estate, but future rent may be taxable. Or say you inherit stock. If that stock pays dividends after you inherit it, those dividends may be taxable. This is where people get confused. They hear inheritance, they're not taxable, and they think they can ignore taxes completely. That can be a mistake. Point number three, retirement accounts are different. Be very careful with inherited retirement accounts. This is one of the biggest danger zones. If you inherit a traditional IRA or 401k, money that comes out may be taxable, and there may be deadlines for when money must be withdrawn. This is where rush decisions can hurt very badly. I have seen people cash out of inherited retirement accounts too quickly because they wanted things to be simple. They ran themselves up into unnecessary brackets, and then they realize the withdrawal may have pushed more income into one tax year than necessary. That can affect taxes, Medicare premiums, retirement planning, and cash flow. Before you touch an inherited IRA, slow down. You need to coordinate with an accountant, estate planning attorney, or a financial planner. And then point number four, selling inherited property can create tax. Do not sell inherited property until you understand your tax basis. If you inherited a house, land, stock, or a taxable brokerage account, you need to understand what happens if you sell it. Most of the time, you're going to get a step up in basis, but you do want to look at this before you sell it. The key question is not just what is it worth today? The key question is what is my tax basis? The basis may affect whether you owe capital gains tax when you sell it. For example, someone inherits a house and immediately sells it. Another person keeps the house for 2 years, watches it rise in value, then sells it. These two situations may have very different tax results. So before you sell, get the right numbers. That may include a date of death value, accountant statements. You can choose an alternative minimum valuation date if you'd like. There's appraisals, and all of this can help. All of these issues can be addressed, and you can get help from an accountant. Point number 5, state taxes may matter. Do not ignore state tax rules. If there is no federal income tax on the inheritance itself, state rules may still matter. Some states have estate taxes. Some have inheritance taxes. Some have neither. The state where the person lived, where the property is located, and what type of asset you inherited may all matter. The one reason a YouTube video cannot fully answer your situation. The details matter. It's one of the things I've learned in life. Anytime we want to be successful, I think the details are so important. I think scripture supports this. People's lack of attention to details in anything that they do is what causes mistakes and failure. Attention to detail, which is a form of diligence, leads to success. Let's say you inherit $850,000. Part of it is cash. Part of it's in a taxable brokerage account. Part of it's in a traditional IRA. And part of it is a house you are thinking about selling. This is not one tax question. This is 4 different tax questions. The cash may be simple. The brokerage account may need basis review. The IRA may create taxable income when withdrawn. The house may need evaluation before sale. And if family members are asking for money, now you also have a planning question. How much can you afford to give? What should stay liquid? How does this affect your retirement? What tax deadlines are coming? This is why the order of decisions matter. If you recently received $500,000 or more and you are already facing decisions like selling property, investing cash, paying off debt, or helping family, this may be the point where you need a plan before you act. You can certainly go ahead and schedule a free, no cost, no obligation, no sales pressure, 15, 20-minute meeting with me. We'll talk about where you are now, where you want to go, and see if it'd be a fit for us to even go to the next step in our no pressure sales process. So, do you owe taxes on inheritance? The answer is maybe. The inheritance itself may not produce taxable income, may not be taxable income, but income from inherited assets may be taxable. Inherited retirement accounts can create taxable withdrawals. Selling inherited property can create capital gains questions. State, estate, or inheritance tax may apply. Wrong order of decisions can create unnecessary stress. The wise move is not to guess. The wise move is to pause, organize the facts, and get advice before making major decisions. Again, if you have recently received $500,000 or more and you're not sure what to do next, you can set up a free call with me, a free meeting with me on Zoom. I have meetings with people all over the country, and we can talk about your situation, and we can see what you need to do next and see if it would be beneficial for us to even talk together or work together. This session is not for someone looking for a hot stock tip or a quick answer. It is for someone who wants a thoughtful plan before making major decisions with sudden wealth. If you like this video, go ahead and hit and subscribe so we can get into your algorithm and you'll see more of it. If you have any comments on what you're struggling with your inheritance, go ahead and put them in the questions there if you don't mind other people seeing them. Otherwise, again, set up a meeting with me. Thanks for tuning in, as always, and we'll see you on the next edition of Sudden Wealth Stewardship.